So, how do you know if a certain part of a town or a city is a good place or a bad place to buy a rental property? Whether you're just getting started, you're completely new to buying rental properties, or maybe you bought a property or two and you want to scale. Here in this video, I'm going to show you how to identify certain locations that are really great and prime to buying rental properties without fancy softwares or spending a whole lot of time driving around looking for the right places. Welcome back, everyone. My name is Sam Kwok, one half of the Kwok Brothers, serial entrepreneur, real estate investor, and here in this video, I'm going to show you how to identify the right locations and places, parts of towns and cities that are great for buying rental properties. So let's go and not waste any time and let's get right to it. Now, one of the rules that you need to be familiar with before we get started and actually looking at different parts of town or cities is something called the 1% rule. Now, maybe you're already familiar with this, but how do you actually apply this to finding the right areas and locations? So for those who don't know what the 1% rule is when you're looking at a property and you're looking at the purchase price, you want the gross rent in that given area to be at least 1% or greater of the purchase price. So let's say I find a rental property for $100,000. I want the gross rent to be at least $1,000 or more every month for the math or the analysis to work. And that leads to the next question, and that is, how do you know what is the going average rent in the area? Well, I use a free tool called rentalmeter.com. No, I'm not sponsored or being paid to tell you guys this. I use this for my own research process as well. There are other tools that you can use, but rentalmeter.com is something that I go back to all the time, which I'll show you in just one sec. But that also leads to knowing the next part of the piece, and that is, what is the going purchase price for the area? So let's go and dive into this actual process, and I'll share my screen with you on how I do this using free tools. Let's go and get started. All right, so I went and shared my screen with you and I pulled up redfin.com, which by the way, you can use just about any tool you want for this. Zillow, Redfin, doesn't matter. They all pretty much get the data from the same place, which is the MLS, which is the tool that real estate agents use to list properties, and all that data gets sent out to Zillow and Redfin anyway. So I'm gonna go ahead and look at a certain area that I'm familiar with, and let's go with Elgen, Illinois, which is not too far away from where I am. And what we wanna look at is not for sale. I want to look at what's actually been sold in the area. So I'm going to go and switch to sold, and we're going to look at the last 3 to 6 months. Obviously, the more recent, the more accurate the data is going to be, but let's just go with the 3-month just for the sake of demonstration. So now what we're looking at are all the properties that were sold in this very area, right, Elgin, Illinois, in the last 6 or 3 months. And I'm looking at all the different prices that properties were sold for. So now I can definitely see kind of a little bit of a trend, right? This area looks like 225, 285. This area looking at 263 to 68. And alongside this, you want to go and pull up rentalmeter.com, and we're going to go and put in Elgin, Illinois, which is the same area that we're looking at. And I'm just going to go and enter in what I think the rent is for that area, $1,500 for a 3-bedroom, 1 bath. And we're going to go ahead and hit analyze. Okay, we're gonna hit analyze, and there you go. So the average rent in the area, looking at the Elgin in general, is $1,725. So now that I know what the average going rent is in that area, basically I'm looking for pockets of neighborhoods I'm looking at pockets of neighborhoods in the city of Elgin that have a purchase price or going purchase price of $170,000 or less. Now, the other way of looking at it is $170,000 per unit if you're doing multifamily. Now, I know this area, I'll probably be more so looking at multifamily, 2, 3, 4 units and beyond. So what I'm gonna be paying attention to is that this area is gonna be more of a multifamily, $170,000 per unit maximum. So preferably I would like to buy, let's say 3 units at maybe $100,000 per unit, as opposed to paying $510,000 for a 3-unit building in this area, which is basically $170,000 times 3. So I'm gonna go back to this area and I'll be basically paying attention to, so here you can see some clusters here, right? It looks like a condo, 106,000, there you go, there's another one. So you can see that this is a pocket that I would be paying attention to because it fits within that 1% rule, right? The average going rent in the Elgin area is $1,700. And I know we can go deeper into looking at actual rents in certain areas or certain pockets of neighborhoods versus the entire city. But this gives you some clusters of, here's one area that would be a good match. Let me go move towards west to see if there are other pockets of area. So here's one that might be an interest to me in buying a property like this and renting it out. Because it's very close to that 1% rule. But this one looks like it's a 1-bedroom, 1.5 bath. So make sure you do your comparisons carefully. Again, I would more so be looking at a multifamily property because you can see a lot of these properties that were sold exceeds the 1% rule, right? It's overpriced compared to what we would typically want to pay to make sure it fits that 1% rule. So we would be looking at more so multifamily, like a 2 to 3 unit type of a deal. That's what we'd be looking at. And you'll find even neighborhoods that are clusters of 2 to 4 unit types of buildings, especially in an urbanized area like this, as opposed to single family residential, where obviously you can see that a lot of these properties are going for 268. This one is 360,000. So it may not make sense for those types of homes to become rental properties because they're overpriced. Does that make sense? So that is how I might look at different pockets of neighborhoods to look at and go, hey, this area seems like it's a better area for rental as opposed to certain parts of the town. So that's what I pay attention to. Basically, this is a free way of looking and researching different parts of the town or city. So really anytime I'm looking at a new city that I want to invest in or a new town, I would essentially do this process and look at which or what part of town do I want to focus on and do my marketing there and team up with maybe a real estate agent or someone boots on the ground to look for properties in that area. I might employ other advanced ways of looking for properties, which we'll talk about in another video. But when we go into some more advanced techniques when it comes to looking at different markets, in our real estate program, we even teach people how to look at different businesses or retails that exist in that parts of the town and know if it's a good rental market or not. So if there's like a Walmart versus a Target, we know kind of what we can anticipate of the not only the quality of the rental market, but also we can anticipate what types of buildings might exist. Fun fact, if you've ever find a laundromat or a liquor store, good chance there's a multifamily in the area. Not always true, but it's kind of like Sam Kwok's secret rule, if you will. But basically what I'm sharing with you guys right now is a very high level overview of how I would essentially go into a new market and figure out what parts of the town is an area that I want to look at, what parts of the town do I want to concentrate that makes most sense in terms of numbers, and making sure that my property actually cash flows and grows over time instead of losing money. So from this video, I hope you picked up 1 or 2 tips that you can use and actually execute on to go and find a area or parts of town or city that works great for buying rental properties. Especially true when I work with students and clients that are from California or New York, and they want to invest in places like Illinois, Missouri, Nebraska, Wisconsin, which tend to be better rental markets, and they have no idea where they should go and look at and where to even start. So this is the process that I follow to study and research different markets that might be more conducive to becoming a better rental market. So if you learned something today and if you thought this video was valuable, give us a thumbs up, leave your comments down below, and share this with your friend. And check out some of the other videos we have about buying rental properties, increasing your wealth, and keeping more of the money you're earning today.